Hello everyone, this is Dr. A.G. Maitli, Assistant Professor, Department of Commerce with Finance, Dr. S.N.S. Rajeshwari College of Arts and Science. Here I am going to speak about cash flow statement. Cash plays a vital important role in the economic life of a business. A firm needs cash to make payment to its suppliers, to incur day-to-day expenses and to pay salaries, wages, interest and dividend, etc. In fact, what blood is to a human body, cash is to a business enterprise. Thus, it is very essential for the business to maintain an adequate balance of cash. There should be focused on movement of cash and its equivalents. Cash means cash in hand and demand deposit with the bank. Cash equivalent consists of bank overdrafts, cash credit, short-term deposit and marketable securities. Cash flow statement deal with the flow of cash which includes cash equivalents as well as cash. This statement is additional information to the user of financial statement. This statement shows incoming and outgoing of cash. Objectives of cash flow statement. Cash flow statements aim at highlighting the cash generated from operating activities. Cash flow statement helps in planning and repayment of loan schedule and replacement of fixed assets, etc. Cash is the center for all financial decisions. It is used as a basis for the projection of future investing and financing plan of the enterprise. Cash flow statements helps to ascertain the liquidity position of the firm in a better manner. Bank and financial institutions mostly prefer cash flow statement to analyze liquidity for the borrowing firm. Cash flow statements helps in efficient and effective management of cash. The management generally looks into cash flow statement to understand the internally generated cash, which is the best utilization for payment of dividend. Cash flow statements. Cash and relevant statement as per AS3 issued by the Accounting Standard Board. Cash fund. Cash fund include cash in hand, demand deposit with the bank and cash equivalent. Cash equivalent are short-term, highly liquid investment readily convertible into cash and which are subject to significant risk of changes in value. Cash flow statement are inflows and outflows of cash and cash equivalent. The statement of cash flow shows three main categories of cash inflows and outflows, namely operating, investing and financing activity. Operating activities are the principal revenue generated activities of the enterprise. Investing activities include the acquisition of disposal of long-term assets and other investment not included in cash equivalent. Financing activities are activities that result in change in size and composition of the owner's capital, including preferred share capital in case of company and borrowing of enterprise. There are two methods for preparing cash flow statement. Both methods gives the same result in respect of the total as well as subtotals of the three category sessions, that is operating, investing and financing. They differ only in manner the information regarding cash flows from operating activities is presented. Importance or uses of cash flow statement to facilitate short-term planning. It helps in planning, investing and assessing the financial requirements of the enterprise based on information provided on the statement about the source and applications of cash and cash equivalent. To assess liquidity and solvency, it helps in identifying the ability of the enterprise to meet its liabilities on time. To manage cash efficiently, it provides information about the cash position by reflecting either a surplus of cash or a deficit of cash in the statement. This helps the enterprise to take decisions about the investment or surplus cash and the arrangement of deficit fund. To facilitate comparative study, it facilitates comparison of actual cash flows and budgeted cash flows to identify whether the inflows and outflows of cash are moving as per the plan. Such comparison will also reflect deviations of the actual cash flows from the budgeted cash flows, for which necessary actions are to be taken by the enterprise. To justify cash position, cash inflow statements prepared to record all the cash inflows and outflows which results in the surplus or deficit of cash for the enterprise. Since all the cash transactions are presented in the statement, it becomes easy to identify the terms which increase or decrease the cash balances. To evaluate management decision, this statement classifies the cash transaction under three separate heads, namely operating, investing and financing. Such classification helps the user of this statement to evaluate whether decisions taken by the management are appropriate from investing and financial point of view. To take dividend decision, in order to declare an appropriate dividend, every enterprise should comply with the prescribed provisions. Example, depositing the amount of dividend in a separate bank account. Accordingly, to identify whether the enterprise has sufficient fund for such compliance, cash flow statement referred by the management also helps in deciding how much dividend to be paid to the shareholders. Limitations of cash flow statement. Non-cash transactions are not shown. It takes into consideration only cash inflows and cash outflows. Non-cash transactions are not considered for preparation of cash flow statement. Not a substitute for the income statement. Cash flow statement cannot be used as a substitute for an income statement because income statement is prepared on accrual basis of accounting, whereas cash flow statement is prepared on cash basis. Not a substitute or balance sheet. Cash flow statement do not show the financial position of the enterprise and therefore cannot be used as a substitute for balance sheet. Historical in nature, cash flow statement is prepared based on the cash inflows and outflows that are already taken place during the year, hence it is an historical in nature. Assessment of liquidity, cash flow statement takes into consideration all the transactions of cash and cash equivalent. This cash and cash equivalent is just one of the component in the current assets which determine liquidity position of the enterprise. Therefore, cash statement alone cannot help in determining liquidity position of the enterprise. Accuracy of cash flow statement. Since the cash flow statement is prepared from the financial statement of an enterprise, accuracy of the same cannot be 100% true.